Okay, so unless you're living under a rock, you have probably heard a little something about the proposed 50-year mortgage out there. And listen, some people love it and some people absolutely hate it. So we're gonna spend a little bit of time today and we're gonna dive in and we're gonna do a reaction to a Fox News story about the 50-year mortgage. Is it a good idea or is it the worst thing to happen to mortgages in a long, long time? Let's dive in, let's see what they have to say, get some of the facts, and make a determination on whether this is the worst thing to ever happen or a little bit of a relief for some buyers that might be fighting affordability issues at this point.
Back in here too, live now from Fox, I am Andy Mack. Of course, getting the keys to your new home, that might be the dream still of many Americans, but a 50-year mortgage on that house, it might not be, as the President Donald Trump announcing a new proposal that might leverage a 50-year mortgage in it, as it might have significant drawbacks. The president floated the idea about a week ago that home buyers should have half a century, 50-year mortgages to make purchasing homes more affordable. On paper, longer mortgages do what they promise, lower the monthly bill, but those smaller payments could come at a cost, higher rates, more interest paid, and slower wealth building over time.
So just a quick moment for that. A couple of things in there. Listen, here's the thing that sticks out to me the most as I hear this from a lot of these stories. President Trump believes people deserve 50 years to pay off their homes. Most people in 30-year mortgages, only about 6% are going and bringing those mortgages to term and holding on to that for 30 years. I don't think a 50-year mortgage is going to be any different. If people are only holding the note, or if only 6% of people are holding the note for the 30-year mortgage, I would venture to say way less are going to hold it for the full term of 50. Could it provide some relief? Yeah, probably. I mean, it'd be a lower payment, but it would absolutely be a higher interest rate in the end. Why? Because the bank has to hold the note for a longer time. Therefore, it's going to endure a little bit more risk. That being said, if only 6% are bringing a 30-year mortgage to term, I venture to say it's going to be 3 to 4% that would ever bring a 50-year mortgage to term. So as long as housing costs, as long as house prices keep rising, I don't think it's going to be nearly the threat we might be hearing from some of these pundits as they've been talking about it in the news. Let's see what else they have to say.
A guy that knows a lot about this, Jason Mitchell of the Jason Mitchell Group, with over $5 billion in sales last year alone. Obviously, you know a thing or two about this. What do you make of the 50-year loan? Could it be beneficial to home buyers?
Jason Mitchell of the Jason Mitchell Group, $5 billion in sales. That's an amazing number. I'm sure there's a lot of people in the group to be able to achieve that number, but kind of interesting. Definitely, a lot of volume if that's the case. Let's see what he has to say.
Well, first, thanks for having me. There's obviously anything that comes out of this administration these days, you're always going to have your pundits that point to the negatives right away. That's the world in which we live in. Let's start with what the proposal is. The proposal is we want to help more people achieve home ownership through a 50-year amortization, through a 50-year mortgage. Now, immediately you hear things like, oh, great, it'll take 50 years to pay off your home, or just more interest for the bad banks out there. And the reality is that although all those are true, meaning you will pay more interest and it will take much longer to pay off your home, the reality is the key to home ownership, as you had just mentioned, is the key. And when you talk about right now, higher prices, higher interest rates, it's very difficult for the average American to purchase a home. In fact, the average age now of the first-time homebuyer is 40 years old. And that's due to high prices and higher interest rates. But Andy,
I'm going to have to agree. That is due to high prices and higher interest rates. And it's shown that statistically, we've been moving that number up as the market has been struggling with interest rates. So there's no question that being said, though, there's always been zero down loan programs like rural development. There's always been ultra low payment programs like FHA. Obviously, if you've served in the military, thank you for your service. And there's a zero down with the VA, one of the best loans on the planet. So I don't know that it's necessarily move-in money and saving up for the down payment that has restricted people. The cost of housing, definitely no question. Also, totally off subject, Jason Mitchell, if you sold $5 billion in real estate, maybe you can kind of get a better setup than wearing headphones like you're playing Fortnite. I'm just saying, you could clearly afford a little better studio in there. But let's see what else he has to say.
Here's the ticket. I did some math before we went on today. And here's the difference, because what people don't think about and what they don't understand is most people refinance their home 3 times and only own their home for 12 years, which means you're resetting your note a lot. So many times you don't even really dig away at that principal because you haven't been in the loan long enough. Now, over a 5-year period, if we were to take a 50-year mortgage versus a 30-year mortgage, your balance after 5 years is $372,000 on a 30-year and $392,000 on a 50. That's $20,000 in principal difference. I get that. But here's the ticket. If you were to get into a mortgage and if the 50-year loan did help you secure a home, if we took an average appreciation of 6% per year, which I think is about fair, in 5 years, your home is worth $535,000. So although you didn't eat into the principal, you now have $135,000 of equity that you wouldn't have had if the program was not available. And that's the key to this proposal that Mr. Pulte has put forward.
Okay, I gotta agree with him on that one too. He's right. And that was the point I was making earlier on how little amount of people bring their loan to term. Is there an average of 3 refis? I don't know. What period are we looking at over? I mean, I will tell you there's not 3 refis in the last 10 years because we've had these ultra low interest rates and you couldn't have refied any lower. When we're coming from a high interest rate environment like we're seeing today into a low interest rate environment, yeah, there's probably 3 refis over a 12-year period. I don't know that the average person has refied 3 times. That being said, I gotta say this guy is spot on with what he's talking about as far as the numbers go. And again, this just leads into the comment that as long as we are appreciating, this product probably does make sense. The moment we're depreciating, this is probably some of the first homes that are going to go into foreclosure at that phase.
Yeah, there's a lot of different facts and figures in there that are maybe overlooked in terms of this. You mentioned obviously just getting qualified for this. When you talk to people about buying a home, whether it's their first home or otherwise, what's the conversations around a 15-year loan, a 30-year loan, and now potentially, what are the type of conversations around all of these types of loans? How do you advise people?
Well, it's based on situation. And, President Trump had mentioned something the other day where he said, look, this isn't a big deal. And what he meant by that is this is a potential other option. And that's why, to me, having an administration that's at least trying to be creative and come up with ways for homeowners or future homeowners to have home ownership, this becomes an option. There's a lot of products out there. There's a 30-year mortgage, a 15-year mortgage. There's adjustable rate mortgages, 3-year, 5-year, 7-year, 10-year. There's USDA, there's VA, there's FHA. So there's a lot of different mortgages out there. This mortgage in particular on a 50-year note, Andy, by the way, it saves you $293 a month. So if you can save $300 a month by having a 50-year mortgage at your disposal and you can access home ownership, well, then it could be a viable option for many Americans out there.
Okay, I'm not gonna lie. I came into this video ready to crap on this guy. I thought that there was gonna be a lot of stupidity put out here, but he's right. This isn't like everybody needs to get a 50-year loan. This is one more choice in a very diverse array of financial products. 30-year loans aren't going away, but this does give people who might not be in that price range to be able to get a little bit more house. And ultimately, what's the downside? You're not going to move as often. If you end up in a product like this, it's going to be really time in the home is probably going to be more extended because your equity is going to be mostly based on appreciation. If the market's flat like it is in a lot of places today, then obviously you're going to be planning on staying in that home as long as you can manage that payment and afford that payment. Probably going to lead to people in that product not moving nearly as quickly, which is that a bad thing? I don't know. I guess time will tell when it comes to that fact.
Yeah, and they could get a new home. People that wouldn't be able to get keys to a home would be able to do that. We talk about the interest rates being really a kind of thing that's holding a lot of people back as well. If a 50-year mortgage was out there, what type of interest rate might be coming with that? And are you concerned about that rate with the interest that would compound?
Yeah, the interest over the course of the loan certainly is going to be much higher. The interest rate that the banks would set, I would imagine it would be slightly higher than your traditional 30-year fixed. Now, why is that? Just as you're getting into a 50-year mortgage, the bank is also committing to you that for 50 years, they're going to give you this set interest rate, 2 generations. And so I would imagine the rate would be slightly higher, if not a full point higher on a 50-year. I'm not sure. But again, if it helps you achieve home ownership, real estate over the course of time always goes up. Even after the Great Recession, and you and I are both here in Arizona, we saw it very dramatically here in Arizona.
We saw it very dramatically here in Michigan as well. We were one of the first ones to go into the recession with the refinancing of Ford Motor Company and then eventually the bankruptcy of GM. And so we also had one of the later recoveries in that time frame. So I have to agree. I mean, if you look at it in the long term, that being said, if you took a 50-year loan in 2007, you probably went through the worst of it when it comes to pain. That being said, if you held on to that same 50-year loan until 2025, 2024, you probably came out fairly well. So again, this is going to be time in the home could be a big factor in this product.
After 7 years, we were back to our old prices. So real estate always will trend up over the course of time, even in its worst of times. We have to get more Americans into housing. It is the key. It is too expensive right now, check to check. Home ownership unlocks the ability to earn equity, which then allows you after 10, 15 years to send your kids to school, to retire because you were able to have home ownership sooner rather than later.
Yeah, and obviously opening that to more Americans, having just the opportunity to get into a house could go a long way. Do you think a 50-year mortgage, do you think that would actually be able to move the needle? Because there are so many people, you mentioned the age number, people aren't buying their first home until roughly 40 years old. Do you think a 50-year mortgage could move the needle, allow enough people to get into homes to change this kind of narrative?
Before he answers this, I'm going to give my answer. No, I don't think it's going to move the needle. I just think it's another golf club in the bag that you can use in specialized circumstances. You're not going to use your sand wedge when you're driving the ball off the tee, but it doesn't mean there's not a point in your golf game where you're going to need that club. I see this as the same thing. Is this right for everybody? Absolutely not. That being said, is it right for some people in certain situations? Yes. Let's see what this Jason has to say about it.
I do, but you have to be cautious because what we can't have right now is we can't have this extreme accelerated buyers into the market center because prices are already too high. We have to be very careful with the measurement of not trying to explode the housing market because of values. Now, how we get out of that is we have to build more supply. And I can tell you that Mr. Pulte, I used to work for Pulte Homes. I started my career there. I met his grandfather several times. I'm from Detroit. I can tell you that family legacy, if anybody knows anything about residential housing, I can tell you it's that family. But the supply is what we need. The interest rate side of what that can affect in terms of qualification, yes, it can be super impactful because it's not about the down payment. We have low down payment programs out there. The kicker is your DTI or debt to income ratio. If you can lower that by, in this case, $300 when you go to qualify, many Americans will actually be able to be approved to purchase a home because it's $300 less on what they call the debt to income ratio. So yes, I do believe it could be very impactful.
And you mentioned just the supply. That is also an issue. But this 50-year mortgage could boost demand. Do those levers just of the economics kind of, are they out there at all? Are they in balance? Is that a concern to you?
They're clearly not in balance, which is why we have the highest cost of housing in a long, long time at this phase. I have to agree with Jason Mitchell here. The real solution is we do need to build more affordable housing. And the fact of the matter is, as we're seeing a bit of a contraction in the market nationwide, that's the opposite of what's actually happening right now. The builders are tightening up because their cost to finance and put out these homes has become higher. higher, and their risk and overbuilding and getting caught with inventory in a down market has become higher. I don't blame the builders for circling the wagons and not leaning into this, but the reality is, if we want to solve this issue as a nation, we really do need to lean into housing, regardless of whether the market is screaming hot and full of super high profit, or if it's like it is now, where it's cooling down and values aren't driving up at 10, 15% in a lot of places. To equal out supply and demand right now, and if you've watched my videos, you've probably heard me say this 1,000 times, and I still believe it now, it really is about creating more entry-level housing. That's where the imbalance is. We have McMansions to spare, but most first-time buyers can't buy them. And the reality is, the people that are in them now didn't just run out and first-time buy a mini mansion. What they ended up doing is they started in starter homes, they made some equity, they let the years accumulate, they took that down payment and rolled it forward. We're ruining that system by eliminating the starter homes from the building industry, or really not eliminating, but they're such a tiny percentage compared to what we need them to be, that it's probably the biggest factor in keeping housing prices high. And of course, from the election, we had all the promises on how it was going to change, and yet here we are almost 2 years in, and not a thing has changed when it comes to putting up more affordable housing. Not a single thing.
Well, supply is certainly a concern. And the problem with supply, it's not a money thing. It's not about, do we have the ability to build? The problem is it takes too long to build. The bureaucracy to build a home and the red tape that comes with it, take Pulte as an example. When they go into a community and they buy a piece of dirt, it takes years and years to get entitlements, to get zoning and all these things. We must look to removing so much red tape when it comes to building, because we need more supply, and the type of supply we need is first-time homebuyer supply.
I'll agree with that.
Real estate is just so local in terms of what you guys do at the Jason Mitchell Group. You're in all of these different markets around the country. Does a 50-year mortgage rate work in one place and then not another? Do they have to be a little bit more specialized? Is that something?
Well, that goes back to conventional loan limits. And so each county has their determined conventional loan limits. Places like California, up in San Francisco, they would have higher conforming loan limits versus places like necessarily Detroit or other places. And so conforming loan limits are set to where if you have to go into jumbo products, as an example, you would have a different product of mortgage that you're applying for. So yes, I do believe that geographically it does make a difference. I still think, though, as long as the 50-year mortgage is available in some parts of the country, that it helps homeowners across the board. As you raise the note or the loan amount that you're borrowing against a 50-year amortization versus a 30, that spread will actually be more impactful. Now, the question is, what do they do about the interest rate? Does the interest rate go from potentially a 6 to a 7 or a 7.5?
Yes, it does. There's no question the banks are greedy, and they will expect more money for this product.
I think that's TBD.
It's not TBD, it's yes.
For homeowners to have a lower debt to income ratio to qualify for that mortgage.
Yeah, it is definitely an interesting idea. Jason Mitchell, anything else you'd like to add about this? It's fascinating to kind of look in the numbers and how home ownership really unlocks a lot of things. Anything else you want to note about this before I let you go?
Well, I think that the proposal, like I said, what I like is there's conversation. There's conversation about helping Americans achieve home ownership, and that's good for everybody. It doesn't always have to be so political. And I think that President Trump, whenever anything comes out from the administration, you automatically have Americans that disagree or want to, torch that. I said the other day that if President Trump said it was good to breathe air, many people would die of suffocation. And it's one of those things to where we have to just understand this is a housing problem. This doesn't need to be political. But we have a real housing problem in the United States right now, caused by lack of supply and excessive values along with high interest rates. And we have to be very careful with how we manage this moving forward. And I believe these ideas and concepts certainly get people talking, and it potentially opens the door to more first-time home buyers, especially achieving home ownership, which is a good thing for everybody.
Okay, I'm going to have to agree with him on that last point too. I really did expect to come in here and hear some dumb bias crap. I'm going to have to say I agree with the majority of what he had to say in here. This isn't a solution for everybody, but it's an extra product out there that people might have access to. I do not believe for a moment, if this product becomes available, that so many people are going to flood to get into 50-year mortgages. Why? Because we are going to see a premium pricing on them to adjust to the risk in the longer term. No question about that. That being said, it's also one of those situations where it can make a big difference in people's debt to income ratio. It can be a great product to get certain people into a house they can afford. In the end, though, I really do believe that this is like putting a Band-Aid on a wound that needs stitches. And our real solution here is building more entry-level housing. We need some type of incentivization, because in the open market, builders are running their business to support their families, to make profit, to, go through all that different type of stuff. And if we don't incentivize them in order to build the entry-level homes, they simply won't. If there's more profitability in mini mansions, they're going to keep building mini mansions. So if we're talking about changes in policy, and obviously this is a change in policy, introducing this product, while it might have a place, it's not going to solve the underlying issues of what's going on in our real estate economy. What we really need to do to make homes more affordable and to solve those underlying issues is we have to band together to create more supply. And to do that, quite honestly, our best route is to incentivize our existing builders to build entry-level housing and try to help get more and more people into their first house at an earlier age. Remember, if you're renting, you're still paying 100% interest every single month to your landlord. That being said, if we can get people for a fair rate into starter homes and allow them to have a great sustainable place, it will help our cities, it will help people, it will help wealth grow, it will help keep the market more and more in alignment, which means a healthier market. We're out of alignment now. We do not want to see 12, 16, in some places 23% appreciation a year. If you're wondering why we're so stagnant at the moment, you can absolutely believe it's attached to the rapid appreciation that happened with the artificial interest rates at 2.9 or 3.25%. While these things seem great in the moment, and they truly were, in the long term, there's some pain to pay for having those artificially low rates. And the pain that we're looking at from it now is stagnation, because instead of staying at that 6% a year, so many people overinflated their pricing in a short term, and that led to short-term gains, but long-term pain. We're seeing it and feeling it right now. As an industry and as a nation, we're better off with more stability in the housing market. How do we bring it? We bring it by building more starter homes. The imbalance in having starter homes for people to move into at a young age is part of the contributing factor of why the first-time buyer age is so old at this phase. So there you have it. I'm curious what you guys think. Do you agree? Do you disagree? Do you like or hate the idea of a 50-year mortgage? Let me know in the comments below. And if you're looking to make a move here in West Michigan, reach out to me. My contact information is in the description below, and I specialize in helping people not only find the right home, but also the right mortgage product that's going to fit them and their goals as they go forward. Thank you guys so much for watching, and I'll see you on the next video.